Hello everyone and welcome to TTT Markets. I am Fotis. I'm a professional trader, and in this video I'm going to show you how to trade Forex using the 1 minute time frame. And I'm going to show you how to do it just like a real professional trader. We have been receiving a lot of messages here at TTT Markets where traders are telling us how they really do like our macro approach, but they would like to see something on a smaller time frame. What about high frequency strategies? What about smaller time frames? Well, this is it. And without any other delay, let me just go straight to MetaTrader 5. This is what we are going to use today. And I'm going to show you how to trade just like a professional trader on a smaller time frame. So this is it. This is the Euro USD 1 minute chart. It doesn't matter right now what time of the day it is, what day we are in the week. This is the 1 minute chart. And I'm going to explain the indicators that I am using and why I am using them. So the first thing I need to tell you is that if you are using a very small time frame, if it is 1 minute or less, you need context. You need the narrative, but mostly context. What do I mean by this? What is the structure of a market? Where are we inside the trading range? Are we at the bottom of the range? Let me do this so I can show you. Are we at the bottom of the range? Are we approaching the highs of today's range? This is extremely important because when you are using a very small time frame, you have no idea where are we in the range during the day. We could be in the middle, at the bottom, at the high, and you have no idea. And this is important because can you imagine that if you are not aware of the structure and you try to sell breakouts here, but this is the bottom of the previous 4-hour candle. This is an important point. It is almost a nice round number, and we have some other kind of support. So you need to understand for that particular day, where are you at the moment you start trading. So you need to be aware what is the bias for the day. Are we at the bottom, so we are looking to go up? Are we approaching the highs, so there is a bias to move lower? Or are you somewhere in the middle and the chances are 50-50? And we do not like 50-50. If there is a 50-50 chance, I'm simply not taking this. Now, for this time frame, for the 1 minute time frame, I have been using the 4-hour time frame, the 4-hour candles for context. There is an indicator. I'm going to share this and I'm going to show you, and you can overlay any kind of candlestick on top of an existing time frame. So that means I have the 1 minute time frame, and you can see here the white candles, the white bars, but I have overlay the 4-hour candles. So I can see where I am. I have a relative understanding where I am during the day. So when I started trading this 4 hours ago, this candlestick has finished. This is why we don't see anything here. When I'm working on the new 4-hour window, I have chosen not to use any kind of candlesticks. I just like to see the bars. I only like to see the previous 4-hour candles. So this is the previous 4-hour candlestick, and this is the one before that. So when I started during the day here in my time zone, what do I notice? Can you see? Well, I'm doing business at the bottom of the previous 4-hour candlestick. I am noticing that the MACD, you know the MACD, it is a very popular indicator. I'm sure you can find it online in any type or form you like to see this visually. So I see here that the MACD starts to turn up. Here we even have the first signal above 0 and the MACD is turning green. This is extremely important. The other important thing is we are at a round number. I have used an indicator, and again, this is freely available and you can find many different versions online, and I'm highlighting the round numbers. And I have chosen to do this every 10 pips. So every 10 pips, I am printing one horizontal line. Why am I doing this? Again, I'm sorry if I'm repeating some stuff, but you need to understand this. Number one, context. Are we at the bottom of something, at the highs of something? Are we in the middle of a range? Where are we? So here, when I started the day, I am at the bottom of the 4-hour candle. We have a round number. We have the MACD turning positive. So this is extremely important. You don't need to buy this. So you don't need to go ahead and try to buy the first impulse higher. But it comes back down again. And this time, what do you notice? It is not printing a new low. So this is the best entry. It consolidates a little bit, 5-10 minutes. It's green, the MACD is green. We are at the bottom. We are right at the round number. We are not moving below the Bollinger Bands. Here, the Bollinger Bands, I'm going to show you. I am using the 60 period time frame. So I am using the 1 hour time frame on the 1 minute. So I notice on the 1 hour, this is positive. The slope of the Bollinger Bands are pointing upwards. It's coming down. No new low. So this is my entry. Stop below. I can risk about 10, maybe just a little bit more, 12 pips. But no more than that, anywhere between 10 to 15 pips. And when it goes to my target, here I made 10 pips and I'm happy with this. Now, why only 10 pips and I'm saying I'm happy with this? Because when you are using a small time frame, such as the 1 minute, you cannot possibly expect that you will go for a 100 pip move. You will not wait all day when you trade the 1 minute to get that big move that will give you hundreds of pips. You go anywhere between 10 to 30 and you call it a day. Why? Because it's a very small time frame. It's the 1 minute. 10, 20, 30 pip moves when you trade the 1 minute are very big moves. It's like when you trade the 4 hour on or the daily and you capture more than 100 pip moves. So again, I will go back to the 1 minute and I will describe my steps. Number one, context. Where are we when it comes to the structure of the market? Are we at the bottom? Is the price starts to moving higher? Are we moving lower? Where are we? This is why we need to have some kind of understanding. That's why I am using the candlestick of a higher time frame. Round numbers, so context. And then I'm looking at things like the direction, the slope of the Bollinger Bands, the MACD. Another thing that I have done, it is extremely important again to have context, and I am using multi-time frame moving averages. So for example, I know here that this blue line, this is the daily 21-day moving average. Now this is extremely important. This is the 21-day moving average, price is above. We are very close, just a few pips. We haven't touched it only for a few pips. This is important. So suddenly this is becoming a high probability trade because we are just above the 21. It is testing this. It's moving up 10 pips. Thank you very much. I can call it a day. It comes back down, consolidates a little bit, respects the Bollinger Bands. This is still green. The slope is up, the direction is up. You can buy here again when it has made this. Can you see this V shape? V. Again here, V. When it makes this V shape and starts moving up, you buy, place the stop above, another 10 pips. Now you might say, what happens when the candle, the 4-hour candle changes and we're moving to a new 4-hour? It has moved up until this level over here and then starts moving south. Stop trading. Consider first, where are we? And is it in your favor to do business here? Do you wish to buy here, euro? I don't think so. It's the time of the day. It is important to be aware of the time, okay? So when I started trading this, it was the beginning of the European session. Now we are moving deep into the US session. There are other traders coming in. So the market, the market nature is changing a little bit. So this is working best when you trade at the beginning of the day. Then there is another thing. I will go here, insert, Fibonacci, retracement. Let me look again on a very small time frame. Where are we? What is happening with this move? So I notice that from the bottom here, we have covered almost 62%, 61.8% of the previous move lower, of the previous candlestick. So that could be enough. This is giving the sellers the opportunity to do some selling. Let's say that the buyers might not be so aggressive over here. They will be aggressive here and they will take the lead from the sellers, but up there, when we have covered 62% of the move down, well, no. So here I take profits, I thank them for the day, and that's it. There is one more thing to discuss, the levels. Well, maybe one or two. So we have over here, you can see previous weekly open. There is an indicator that I am using that prints horizontal lines that show me the open, close, high, low of the previous week and the previous month. So if the price is moving very close to one of these levels, it could be an excellent scalping opportunity. Again, you need context. You need to understand where are we, what is happening, if there are any news coming out, if we are near a release. It is important that you don't do this when we have NFP, when there is an interest rate decision, or when we have inflation coming out. So you have to be very careful with this. Again, the boring session at the beginning of Europe, when the UK session starts, when the European session starts, this is the best when you trade the euro. And it is best to trade this with a heavier currency. If you try to trade the pound yen with this, it might be a little bit more tricky and you need to account for larger volatility. So this is something you need to consider. One thing that I haven't discussed is what about this indicator? This is simply a regression channel. You can use it, you can leave it. It just gives me an idea how the regression is evolving on the 1 minute time frame. If I see that the channel is suggesting that it is now pointing downwards and the price respects this, I will take this into consideration. I will take my profits, or I will move my stop loss or profit target, and I will be very careful. What happens if you don't have these indicators? I will go here. So I will, let me remove a candle. So I will go here, let me remove this, and let me remove this. What am I doing now? Well, the same principles still apply. It is no different. You can use vertical lines to understand where are we when it comes to the 4-hour candles. You see this big move down. It is very close to a round number. It comes back up, moves back down again, a round number. This time it is not printing a new low. Can you see? So great area here. And look where the Bollinger Bands is. V-shape, up, V-shape, up. So really the secret for the success of this approach is to understand where are we in the daily trading range, to understand what has happened on a larger time frame just before the time frame we are working now. So if I'm working here on a new time frame that starts, for example, 8 o'clock in the morning my time, well, what happened in the last 4 hours? What happened overnight? So this is something to take into consideration. I would strongly recommend that you do not use this. I repeat, You do not use this when important news are coming out. And be very careful with risk. If you go for 10 pips or up to 15, 20 pips, you can't risk 50 pips, you can't risk 100 pips. So you have to be very careful with this. You cannot risk more than you earn. So if you are going for 50, 20, 30, your risk should be similar. At the beginning, try going for 10, 15 pips consistently and manage your risk accordingly, and avoid high volatile sessions or times when news are coming out. Thank you for watching. I hope you got a good idea how to trade the 1 minute time frame. See you in the next video here at TTT Markets.